Today's topic is audit planning and fieldwork will be presented by Group B3. Assessment of risk. Business risks relate exclusively to the company and its stakeholders. These risks can be very diverse, but the largest risk facing any company is that it ceases to continue. The risks include any factors that could lead to business failure. Audit risk is the risk that the auditor gives an unqualified audit opinion when the financial report is materially misstated. There are three types of audit risks, which are inherent risk, control risk and detection risk. Inherent risk related to the characteristics of the business that may cause material FS. IR is high if no internal control system, and IR is low if internal control exists. Factors used in assessing inherent risks are 1. Nature of client's business, 2. Integrity of management, 3. Client motivation, 4. Client's knowledge of accounting standards, and lastly results of previous audit. Control risk is risk that the client's internal control will not prevent or detect material errors or misstatements in the account balance. Exist due to the inherent limitation of internal control system and inadequacy of the segregation of duties, such as human error, faulty judgment. CR high if internal control system is not effective, and CR low if internal control system is effective. Detection risk is the risk that any remaining material misstatements after assessing IR and CR will not be detected by auditor, and auditor's substantive procedures and review FS will not detect material errors misstatements. Detection risk is high if the auditors are not competent and due care, and detection risk is low if the auditors are competent and exercise due care. Audit sampling is the application of audit procedures to less than 100% of items within a population of audit relevance, such that all sampling units have a chance of selection in order to provide the auditor with a reasonable basis on which to draw conclusions about the entire population. Representative sample is one in which the characteristics in the sample of audit interest are approximately the same as those of the population. Things that cause a sample to be non-representative are: a non-sampling risk, which is the risk that the audit tests do not uncover existing exceptions in the sample because auditor failed to recognize exception or inappropriate or ineffective audit procedures. B. Sampling risk, which is the risk that an auditor reaches an incorrect conclusion because the sample is not representative of the population. Can be controlled by using an appropriate method of selecting sample items and adjusting the sample size. Reasonable assurance is expressed in the auditor report as obtaining reasonable assurance about whether the financial statement are free of material misstatement.